Good morning, everyone. This is Beth Rickliffs with IAMS Insurance Agency Marketing Services. I'm a life insurance sales director here at IAMS. Thank you for joining us today on this Monday webinar. We will be hearing from Tyler from Stonewood here in a minute about legislation risk and what's going on in Washington. I am going to start off the webinar like normal with some information about IAMS. Of course, we've got some veteran agents here on the line with us, but we also have some new folks that don't know anything about IAMS. So I'll do that real quickly, and then I will turn over the presentation to Tyler. So as a new agent, we do offer a new producer program to get you started and sent you to start writing business with us. All these levels are based on annuity production. Life insurance is going to be 10% of that. So in your first 6 months, for example, if you reach the $100,000 level with annuities, you could, get an iPad, you can cash out for $750. Again, that equivalent's going to be $10,000 of target in life insurance premium. And you can see the more business that you write in that first 6 months, the incentives get to be larger and bigger items. You can cash out whenever you want, but this is what we've got going on as far as new producers go. We also want to thank any agent that gives us a referral to IAMS. Our business is not any different than yours in that we get the best agents from the ones that are referred to us. I'm sure that you feel the same way with clients when someone's referred to you. So once they get their first contract into us, we will give them a $50 one-time bonus. We also, on all of the production that they're writing with us, we give a commission towards you. That's not a haircut off their production or commission or yours. That's just out of IAMS pocket. So in the case of life insurance, it's 0.15% of their target business would be a commission that's paid back to you. And then obviously that varies depending on other product lines. We want to encourage you to put money back into your business. So we do offer marketing reimbursement on index annuity premium. For every $100,000, it's going to be $100 of marketing reimbursement. Single premium life is going to be $200 for every $100,000 deposit that you have. And for life insurance target premium, every $10,000 is going to be $200. We offer back office support in many different ways, from our website where you have everything 24/7 at your fingertips, from working with life insurance and annuity sales directors on case design, advanced strategies, and so forth. We also have an amazing case management team, both on the life side and the annuity side. Once that application comes in, it's completely our goal to get it through the process as soon as possible, because that's how, of course, you get paid and how we get paid too. We do have paperless contracting, e-applications, just about anything that you can think of as far as support. We have you on the back office support. I mentioned a little bit already our website, but that's your 24 hours a day access to us. We have excellent sales tools under there, under the sales resource tab. If you haven't registered for IAMSinc.com, go ahead and get that done. There's a registration link at the top right of the page that you will put your information into. It does say that it takes 24 hours to get approved, but that's not accurate. You get approved right away, but you do have to approve it with an okay on your email. I will tell you that if you haven't registered and plan on doing so, If you don't get that email, make sure to check your spam or your junk mail because it will often go there. We're going to have all of our life insurance information out there on there. We've got a term quote engine, a final expense quote engine. We've got forms online. And then we also, we'll talk about it here in a second, but the ability to submit business from our website as well. eApp solutions, what we have are a few different ways of submitting online business. COVID really jump-started this process. I think pre-COVID, we had a lot more people that were writing paper applications, but when we couldn't see people face-to-face, we had to figure out how we were going to do this digitally. And so then we've come out with these different platforms. Firelight is going to be mostly annuity business with the exception of like F&G and National Western Life are on Firelight. Oh, and Allianz could be on Firelight too. Most of the life insurance e-application process is going to go off of iPipeline, or you'll see it as iGo eApp Solutions on our website. With that said, North American and F&G can also be written on that one, just like Firelight, but most of the carriers you're going to find on those two platforms. Here is a slide just to kind of break it down. As you can see with Firelight, most of them are annuity carriers, and then we have just a few that would be on the life side. If you have any questions about how to submit on iGo eApp Solutions, reach out to your life insurance marketing team, the directors, and we can always get you with a case manager too if we have further questions. But that is a great process to get involved in. There's a lot less mistakes that happen on applications that are done by eApp. They also seem to get through the process of underwriting a lot quicker. So I would strongly encourage you, if you are using that, is to get used to the process, because once you do, you'll never look back. We have a dedicated creative marketing team, and they're in charge of all kinds of things. It can be as simple as designing a business card, to a website, to letterhead. I think I already mentioned website, but one of the things that separates us from other marketing teams, especially if you're going to outsource, is that our creative marketing team is very familiar with the industry, and chances are the thing that you're asking for is something they've already worked on, and we can easily get it out to you. So it's a very strong team. One thing I would mention is that we do offer a free service called our marketing analysis. You would work with one of your sales directors, either on the annuity or the life insurance side. It's a form that we fill out to see where you are at with your marketing from all aspects of your business, and then where you want to go with your business. And then we turn that over to creative marketing, and they make you a customized plan as far as what kind of marketing you should be doing to get to the goals that you're wanting. And that is a free service, so I would take advantage of that. If you're wanting to get, obviously we do annuities, we do life insurance, we do long-term care, disability, Medicare, supplements. We also manage money, and so we work with agents that maybe have never done that, worked with higher net wealth people that are needing help with managing money, where you may be starting just from the beginning of getting your Series 65. Our team at IMS Wealth Management can help you with that. Or maybe that's already a part of your practice and you want IMS to be a part of all aspects of your business. We certainly would love to have a conversation with you about that. The contact over at IMS Wealth Management is going to be Duncan, so ask for him. We do life and annuity academies throughout the year. We're wrapped up for this year, so we'll be working on our spring platform over the next couple of months. That's an opportunity for agents, usually somewhere between 20 to 40 agents that we invite out to go into more in-depth strategies regarding annuities and life insurance. It's a great way to rub elbows with other agents that are out in the industry and get ideas from them as well. So if that's something that you're interested in, I would reach out to one of your directors, whether it be on the annuity or the life side, and let them know that that would be a training that you'd be interested in attending. We usually have it sponsored by a company, and that has varied from Athene to Allianz, North American, Equitrust, and a few others. Let's see. We do have a trip, and one thing that's unique with our trip is that we give you an 18-month qualifier. Most everybody else is a year qualification. Ours is 18 months. We've got a 4.5 million points to qualify. If you're interested in what those points, how that equals out, you need to reach out to one of your annuity or life insurance marketers. One unique thing that's happening right now is Athene is also sponsoring a trip with us. And right now, October and November, we are offering double the qualification points on production, and that counts on both trips. So, for example, if you are writing Athene business, you're going to get double the trip credit on our Seaside Sanctuary trip as well as the Athene. But all of our products, if it's outside of Athene, are going to also qualify for that double the trip credit just for the months of October and November. So if you're wanting to catch up, that's a great way to do that. You can always follow us on Facebook and LinkedIn, and that is all I've got. So I'm going to go ahead and switch this over to Tyler.
Sounds great. Yeah, appreciate you having us on. And what I want to take you through, Tyler Randall, National Sales Director with Stonewood, and I just want to take you guys through a little intro on Stonewood, and then we're going to focus on how to differentiate your business through what we would call legislative risk, which is how Washington can impact your retirement, and not just through tax increases, but their ability to change the rules on us. And I think this is something that's going to be very important as we move forward over the next 12 to 18 months as the selection cycle kind of heats up. People are going to be keenly tuned into what's going on in Washington, and they're going to be keenly tuned into how it affects them personally. And of course, as we look in the horizon, the tax rate increases, I think that we all know are coming. We've built out a number of resources to help your business, and that includes really three things from Stonewood. It's prospecting and marketing, not only around the tax and legislative risk, but a number of topics. There's a full and robust resource catalog that you can access. So as you look at this content and you say, yes, I'd like to plug into it, you can literally get a login and password and get access in very quickly, and we can help show you how to use that information, how people are using it in their business. And then we have a software program that very simply tells the tax and income benefits for allocating dollars to a tax-free, whether that's Roth or IUL or some sort of tax-free vehicle. We want to be able to share that in a way that the general public can understand it. And so we've created resources for you that makes that very simple to use. So those are the three things that really we do at Stonewood: prospecting, marketing, software, and training around how to be effective and how to grow your business in the tax-free space. But what we're going to focus on here today is what we would call legislative risk, and that's Washington's impact on your retirement. And a lot of that is, we saw that through the Secure Act, how we used to be able to do stretch IRA planning, and then all of a sudden, with a stroke of a pen, there was no more stretch IRA. It was all being distributed over a 10-year period. And that affected a lot of people as far as their planning for retirement, especially how money was changing from their use to their family's use. And so we want to be able to let clients and prospects know that we can help them. We can help them protect their accounts from Washington. And I'm going to take you through some of the ways that we can do that, some of the resources available to you. But a lot of this is message framing. And I think it's important for us to first look at taxes and then look at legislative risk and how we can simply articulate the issue to clients and prospects, and then how we can help them solve and become a solution for them, where we're going to be the advisor of choice or the agent of choice, where we can help gather more assets, do more business, and help more clients. So the first thing I want you to think about is tax planning a bit. And what we like to say is how we frame this. There's two different ways of looking at taxes. It's a micro tax analysis, which is what all of your CPAs and accountants do every year. We try to look at 2023 taxes and say, how do we minimize these effectively when it comes to April 15th or October 15th or whatever your tax filing deadline is next year. It's a very narrow focused look. And then there's macro tax analysis. Macro tax analysis is saying, okay, Mr. and Mrs. Client, over the next 30 years of your retirement, how do we help you reduce your taxable, how do we help you enjoy tax savings that are hundreds of thousands, maybe millions of dollars? It's a long look at that. And so I would challenge you to think about it like this. Whenever we're saving for retirement, how do we think? How do you do planning for retirement? Even in your own shoes, think about it. Are you thinking about it on a 1-year look of savings? Or are you looking at it long term? And I think it's important for us to look long term. And it's the same thing with taxes. Why would we look at it at a narrow view? Why would we look at a micro look? Well, especially when we're talking about retirement, we've got to think about it in the macro. And so the frame for us that we can use that kind of differentiates our business is what we would call the debt to the IRS. And a name that you guys probably know is a guy right here that will really talk about debt in a lot of ways. And his mantra, obviously, get out of debt. And we talk about a lot of things, paying off your home and paying off your car and all of these things. But the one thing that always gets missed is the debt to the IRS. And when somebody receives their statement, and this is just a sample statement that somebody receives, do they own all that $377,000 in this example? Is that all their money? Could they take that money and go put it down on a property or buy a car or a boat? Well, they could, but what would happen the next year, that April 15th? What would they receive in the mail? Probably in February, right? They're going to get a distribution note that says, hey, you took this money out of your qualified account, and whether you know it or not, there's a debt to the IRS. In fact, it's about $95,000. And for most of our clients and prospects, this is the largest debt one of their largest debts that they own. Obviously, that your house is usually number one, but the debt to the IRS is the one that most people don't talk about. And that's the one that when we talk about legislative risk, it's how much taxes that Congress can change the rules on how we're taxed, and the debt to the IRS goes up, and then also how those dollars are distributed to your family. These are tax and legislative risk. And so one of the simple ways to think about this is we would encourage you always, as you're talking to clients about this, to always use it as the IRS, the debt to the IRS. Some people say, hey, we're gonna pay our debt to this guy. And you guys can all look at that picture there and know who that is. That's Uncle Sam. But there's a lot of people in our country that feel like Uncle Sam is a very patriotic person or figure in our country. And a lot of people, especially our older clients, feel that way. So when you say we owe Uncle Sam, that may not sit that well with a lot of people. So when we frame this and we say the debt to the IRS, how many people do you know that enjoy the IRS, that like the IRS, that love the IRS? There's nobody. So you're going to have to keep it safe when we're talking about macro tax analysis and our debt. We're talking about debt to the IRS. Now let's talk a little bit about legislative risk, and that's kind of our topic here today. We framed the tax story, debt to the IRS. Part of your largest debt could be your qualified account, and then your legislative risk. And what we like to say is that our tax code is kind of written in pencil. In other words, every couple of years when Congress gets together, we can go ahead and they could change the rules on us. And that legislative risk is very much alive and well, especially as we look at the debt that we have in the US right now. And so one way to frame this that's simple is to let people know that the IRS is your business partner. And whether you know it or not, they are. I'm sure all of you are business owners out there, or you are working with business owners. If I was to tell you that I wanted to go into a business 50-50 with you, but you put up all the money, right? You put up all the money and we're going to be 50-50 partners. And a year from now, I come back and say, you know what? I want to be a 60-40 partner with you, or I want 70% and you get 30. How would you feel about that? How would your business owners feel about that proposition? Well, they wouldn't like it and they wouldn't stand for it. The problem is, since the IRS is your business partner and that the tax codes are written in pencil, that's a reality. Every couple of years, they can own less and less of their qualified account. They have a partner. And we looked at that with that example on their statement. And so if you want to frame this in a way that your business owners or your prospects can understand, it's the IRS, it truly is your business partner. And so one of the things that we try to really share with clients around legislative risk and how Washington can impact your retirement is there are those taxes that we would consider are mandatory, and there's those taxes that are considered optional when it comes to your retirement. Now, how many people on this call want to pay an optional tax? That's nobody, right? And so a simple way to show this is through our software and what we call our potential tax impact report. And this is an example of somebody with $500,000. If they keep their qualified account, the total taxes that they could potentially pay here is about $376,000. And that may be surprising to people. But the number on the right on a conversion to a Roth in this sample is our mandatory taxes. This is the amount of taxes that this client owes on this $500,000 that we cannot avoid. This is how much current tax rates, how much we'd have to pay if we were to liquidate this $500,000. However, if we keep those dollars, there's an optional tax if we just hold on to it and do nothing. And here's an easy way to promote conversion planning, or if you want to gather assets from the bank or from Edward Jones or other places that they hold their dollars in a qualified account, you can create a report like this from your Stonewood software and say, look, here's your mandatory taxes, Mr. Client, Mr. Prospect, and here's the optional taxes. Does it make sense for us to pay some of the taxes now so that we could enjoy, like in this example, a $250,000 tax savings? Would that make sense for you? And so this is an easy way to start that conversation. How we can position IUL from this is pretty simple. And in our marketing standpoint, we talk about the tax code. And a lot of you are familiar with Title 26 of the US tax code that covers the 401k, where we're talking about deferred taxes, right? So this is literally a line item. I can flip to this page. This is actually a tax preparer's book that you can see at the Internal Revenue Code. We go to Title 26. I don't know what page that is, 1401. We can find out the language around deferring taxes through a 401k. Well, a little bit further in that tax code is section 7702. And all that is another part of our tax code that deals with tax-free investing through a private contract with an insurance company. So a lot of times if we frame this as tax code and tax code that the wealthy take advantage of, now we're framing it in a different way. It's not just insurance, right? We're talking about ways for you to mitigate legislative risk through what we call investing in a private contract between you and an insurance company, taking advantage of 7702 through a private contract where the rules are very difficult to change in a private contract. Congress can't get together and just say, hey, we're going to change all the private contracts in the US. No, what they've done in the past with specifically around life insurance is grandfathered in the old contracts so that the new contracts played by different rules. But it didn't mean that they could change the rules on those private contracts. And so when we talk about things like micro tax analysis versus macro to help avoid legislative risk, to help converting dollars into a private contract rather than an individual retirement account, IRA, where Congress can change the rules on us. These are things that really get the wheels turning for people and understanding that we're just taking advantage of a different part of the tax code that allows us to be a tax-free investment. And so 7702, Title 26, just part of the tax code. Another way to think about this and frame this is kind of one of these. How many of you people have or even know what this is? If you're on this call, you probably, if you're in your 30s or 40s, you may not have ever had one of these. If you're 50 plus, you certainly did. And this is what? It's a telephone, right? And what does a telephone do? It makes calls, right? We can call somebody with it. What is this? Also a telephone, but what else does it do? Right? It's a calculator. I can check my trade stocks. I can surf the internet. I can do a number of things. I can track my weight loss goals. There's all kinds of things that the new technology can do. And so when you've shown that you're using Title 26, Section 7702 of the tax code in a new way, you've also got to say this life insurance is not what you used to be. It's not your father's Oldsmobile, if you will. It's not that old telephone. Yes, it is life insurance, but it's so much more. It can protect us from market risk. It can provide living benefits that you're going to need in your 80s. It can provide tax-free investing. It can help us mitigate this legislative risk. And those are all things that new technology and these new life products can do. So it's all in the way that we frame things and we tell the story. And so part of what we do at Stonewood is not only help you tell that story a little bit better, but we help you market that story. And one of the resources that we use to market these ideas in a simple way, to nurture leads along, to help take clients, turn them from prospects into clients, is a program we call Retirement Tax Bill. And that Retirement Tax Bill is a custom landing page we can build out for your business. It looks just like this, except where that sample company logo is. That would be your company logo and name. And you can see that the landing page asks a very simple question. Is your tax bill in retirement too big? Find out in 30 seconds. Somebody can put their name, their age, their dollar amount, and their qualified account, and in literally under a minute, if this person was, let's say, 60 with $500,000, they filled this out, they could get their information. Here's your total taxes you're going to pay with your existing approach. Here's your total taxes with adjustments. And somebody can see that there is several $100,000, $300,000 of tax difference here. Your calendar link can sit right here on this page where somebody could click review your results with a financial professional and schedule a meeting with you. But what also happens is Stonewood generates a report automatically that's emailed to that client or prospect, and it gives them the details of where those taxes are going to come from and what reallocating to a tax-free might mean. And it invites them to a short call with you. And anybody who runs one of these reports ends up in your dashboard at Stonewood so that you can follow up with them if they don't end up on your calendar. So how do we use this? Well, number one, the easiest way is to take all of your current clients and prospects, and we send them out what we would call your email marketing. We just send them an email and invite them to take 30 seconds to run their numbers and see if the macro tax savings of that of multi-$100,000, maybe millions of dollars, is meaningful enough that we should have a conversation about it, right? And so we're nurturing people along to have those types of conversations. We can also take that landing page and link it to your website. We can put it out on your social media, Facebook, LinkedIn. And this is a way now we can start looking and prospecting. You can use it for client referrals. We actually have a whole playbook, the top 10 ways to use retirement tax bill and follow-up funnels that you can use. And so that's a great way to open the conversation. We've talked about macro analysis. Okay, well, now that we kind of understand that, and maybe you're talking about already, how do we market it? How do we get people engaged in that conversation? Because those conversations end up in gathering more assets, they end up in writing more annuity and life business, and they end up in turning more prospects into clients. It's this macro tax analysis. It's the ability to say, okay, not only can we help you save in taxes, but we can help you save from a legislative risk on your qualified account, because it's subject to rule change. And we have a whole program in addition to the retirement tax bill available to you that is in our Legislative Risk Toolkit. And that Legislative Risk Toolkit has Stonewood State of the Union calls. This is something where if something happens in Washington, we're going to have a call and you're welcome to join us. We're going to put out a white paper on it. Here's the things you need to know. This is what this bill does. These are the tax provisions that are going to impact your clients and prospects. And these are things that in your resources you can use and get out to your clients and prospects so that you are differentiating your business. That's what we talked about up front. If you want to use client brochures like this, Washington, and your retirement, and advertise this in a physical mailer where you could say, hey, send us your information. We'll send you a white paper on Washington and the 4 risks to watch. The Inflation Reduction Act, what was in it? You know, there's a lot of resources here that you can download and utilize and put on your website. You can mark it out through your social media. You can make it available as a call to action from a radio or TV or podcast or seminar if you're doing those things. So there's a lot of resources here that talk about macro analysis and also investing in contracts and not accounts through the IUL. We've also built out email marketing and social media templates that you can do a steady drip of this type of language to clients and prospects. We've even built consumer videos, short 1 or 2 minute videos that talk about legislative risk and how it can impact your client's retirement and the need to talk to an advisor about protecting from tax and legislative risk. So this toolkit, here's just kind of the bullet points of what is available to you. There's a seminar, Protecting Your Retirement from Washington, or webinar if you prefer to do something like we're doing now. Email videos, consumer white papers, one-pagers, tons of content here. So if you say, hey, I'm with you, Tyler, the next 8 to 12 months, well, this election cycle is heating up, and I get that this legislative risk is going to be top of mind. I'd love to be able to access resources like this to differentiate my business. You don't have to reinvent the wheel. You can come to Stonewood and we can certainly help you out with that. Beyond the tax and legislative risk toolkit, we do have consumer books that are available. You can there's 3 books that we've used that are all available, and you can use them either generically. They're 100-page books that tell the story and help pre-sell the idea of using a tax-free and protecting your account from legislative and tax risk. You can also customize them if you wish. If you want to use them and put your picture and bio on the back and write the forward, we have a program for that. And that's, you know, just giving some association, some perceived value as an expert. You can use them as giveaways in seminars or mail or in-person meetings. There's a number of ways that you can use this. This new holistic book has been one of our favorites, one of the most popular. This is the way a customized book would look. It's split covered on the back. If you want to use them digitally, there's a digital version of this book where you can email it out. So just know there's a lot of content in here that you have access to and that you can use. I mentioned seminars. The rising tax risk has been very popular as far as that legislative risk topic goes. There's the tax and legislative risk. We use our seminar, in our seminar, we will use our tax analysis in the books as a nice call to action for somebody to schedule a meeting with you. And of course, we talk about the micro versus macro tax analysis. We set up the debt to the IRS. All of those things are part of our marketing tools and resources available to you. So just know there's a number of brochures, white papers, one-pagers, toolkits available to you that all tell the story about tax and legislative risk. And if we can be of service to you, we can give you access to a dashboard, login and password, get you set up and get you access to all of these resources. And then we don't expect you just to go it alone. We do assign you a Stonewood success coach to help show you how to customize this marketing tools and information, help work cases, help prospect, how to use that legislative risk toolkit and the retirement tax bill effectively in your business. So that's all part of what we do. So wanted to keep this kind of short and sweet. I think we kept it to about 30 minutes here, and hopefully that gives you a good overview of the tax and legislative risk that exists coming out of Washington, how they can change the rules on us, just not raising taxes, but also changing the way that those qualified accounts where most people have their money they've got a partner, it's the IRS, and they can not only tax it, but distribute those to your family members in a way that you're not planning for it. And we can help people protect their dollars from that tax and legislative risk by getting them into private contracts with an insurance company via IUL, and that's section 7702 of the tax code, where the wealthy tend to utilize it more often than not. All those things are resonating with you, just check back in with us or your marketer there at IMES, and we can certainly help you get access to these resources and help you take that message out to differentiate your business and help you grow your business here the remainder of this year and into next year. So that's really all I have. Anything else that you wanted to add, or are we ready to shut her down?
I'm almost ready to shut it down. There's a couple of questions I have for the audience. There are polling questions, so I'm going to launch them right now. I just launched the first one. If you can answer yes or no to that. Okay, we'll close that one down. And then the next one is if you're currently selling IUL. Okay, and one last thing is if you are interested, if you've ever done a marketing analysis. All right, well, Tyler, thank you for joining us this Monday morning. We really appreciate it. I know I got some new things out of the presentation for sure. Everyone on the call, feel free to reach out to myself as the life insurance sales director, or Tony Butler, Curtis Hawks, and have a great week. Thanks, everyone.
Thank you.